Welcome back to America Decides. If you spent any time at all watching cable channels devoted to the stock market or American business, you know this to be true. New comments from President Trump and his top trade advisors are sowing confusion over what the administration's actual tariff policy is. That was accelerated when, late Friday, Immigration Customs Enforcement announced that some electronics, like smartphones, laptops, and computer chips, would be exempt from steep tariffs on China. It was actually Customs Border Protection that did that, made that announcement. That was very late Friday. Then the president on Sunday contradicted that, suggesting these products were simply moving into what he described as a different tariff bucket. I want to bring in business and finance editor for Semafor, Liz Hoffman. Liz, it's great to have you with us. I want to play for you some sound from Howard Lutnick, the Commerce Secretary, over the weekend about this duration of exemptions. Let's listen.
This is not like a permanent sort of exemption. He's just clarifying that these are not available to be negotiated away by countries.
What does that mean?
Your guess is as good as mine. And look, the messaging here has been, on your previous segment, you were saying that the president said he wasn't going to change his mind, but he needed to be flexible. And a week ago, it was Treasury Secretary Scott Bessent saying these aren't negotiating. This isn't a negotiating tactic, but they're negotiable. And I'm as confused as you are, and neither of us is trying to run a multinational company and try to figure out what to do with our supply chain. So, look, I think setting aside whether you think this is the right strategy, the tactics are all over the place and are muddying the waters for anyone trying to figure out how to navigate this.
And there's a psychology that sometimes flows through market trading of equities, but there's very much less psychology when it comes to the bond market. And you've written in Semafor about that's the thing to watch, and that's the thing that was most provocative, that caught the president's attention and led him last week to dial back on the intensity of the tariffs.
That's right. Most people are thinking about their 401ks and the stock market. And at some point, a tanking stock market does become the government's problem. But that is a ways off. They really pay attention to the bond market, which, is much, much bigger than the stock market and much more important, both in what it can do to the economy and what it tells you about the economy. And what happened last week is that borrowing costs rose very, very quickly. The interest rate on the 10-year Treasury bond had its steepest rise in almost 20 years. And that really spooks people because it suggests that there's a real collapsing credibility, that people don't think that the U.S. government is a safe borrower anymore. You think you walk into your bank and the bank looks at you and looks at your financials and looks you in the eye and says, do I think you're going to pay me back? And for almost all of modern history, it's been a no-brainer, people lending money to the U.S. government, and that they decided it was a riskier bet. And it's also a problem because we're spending too much paying that interest. We spend, the U.S. is going to spend more on interest payments than on defense this year. And even people who aren't kind of chicken little deficit hawks get kind of queasy at those levels.
And Liz, it's also something that I saw today that this isn't a brush fire yet, but lots of publicly traded companies are deferring putting any forward projections out to be evaluated against their performance for their shareholders, just deferring that, saying we're not going to offer any guidance because we can't in this era of uncertainty. That has to also be suggestive about not only uncertainty, but probably a pullback in future plans that they might have contemplated under status quo circumstances.
Yeah, no major company is making a big investment decision today. I can say that with a fair amount of confidence. I think it's just impossible to project. And look, companies, CEOs, the capital class, they have some policy preferences. They would, all things being equal, like taxes to be lower, like tariffs to be lower, but they really want to know the rules of the game. And it makes it incredibly hard to plan and to do the kind of major investments that Trump wants to announce in the Rose Garden, that he really wants to see out of the business community. He's making it harder for them to deliver.
And Liz, I will ask this to everyone who comes on. The fundamentals of the economy yet are still pretty strong, yes?
Yes. The problem is that most of the metrics that we have to say that are sort of by definition pretty backward looking. And particularly right now, right, we're early into the second quarter. So the numbers that you're starting to see out of companies, those are basically worthless, right? We had good inflation data last week that inflation had cooled, and it did not make anyone feel any better because it's so backward looking and does not capture what's going on now. That's sort of the problem, basically, with the recession is that you only know you're in one after you've been in it for a little while. And so I think it's very hard, which is why people grasp onto these indicators like the bond market, and they gain outsized importance, things like consumer sentiment, because they're the best kind of snapshot of where people are today and where they think that the world is going to be. And those numbers have just gotten, I've never seen them turn this quickly.
Semafor's Liz Hoffman, great stuff. Thank you very much. I appreciate it.